This is a case analysis of CIBa Specialty Chemicals takeover of Allied Colloids by Richard Arias, prepared for Dr. Shahrokhi, Fin 139, CSU Fresno. In late 1997, Hercules Chemical of the USA attempted a hostile takeover of Allied Colloids. CIBa Chemical would later play the role of a white knight, paying $2.2 billion for Allied. Hercules CEO Keith Elliott stepped out of the bidding war, citing an intolerable risk to make a higher bid. There are many reasons why Allied became a takeover target. The most prominent reason was that Allied possessed a water treatment technology in the form of additives to make clean water. This was viewed as a high growth market in the late 90s. Also, Allied had high operating margins. At 19%, this was well above the operating margins of CIBa, which were around 10%. And these type of operating margins would greatly improve the financial statements of a company who was willing to take Allied over. Another factor is the size of Allied. They operated in a niche market, and they had a market cap that was attainable by a larger chemical company with a larger market cap. CIBa valued the gains from acquiring Allied on two levels: a qualitative level and a quantitative level. Strategy. CIBa's strategy, as a newer company who had just spun off from Novartis, their main strategy was to create shareholder value. And a key objective in this was to grow profitability. And they were going to do this by adding high value added products and services. High value added meaning product differentiation, product performance, and various product offerings. CIBa viewed Allied as a high value franchise, which fit perfectly into CIBa's strategy and objectives. On a quantitative level, value-based management was used, and this was a management style to ensure that shareholder value was created. And in order to measure this, CIBa used economic profit. This is ROIC, or return on invested capital, minus the cost of capital. In 1997, CIBa had economic profit of 64 million Swiss francs. After the Allied acquisition, year-end 1998, economic profit went down to negative 6 million Swiss francs. The main effect of the acquisition on the balance sheet was on long-term debt. There was an increase of 3.3 billion Swiss francs in 1998. In 1997, there was only long-term debt of 294 million Swiss francs. Also affected were total assets. Total assets increased by 2 billion Swiss francs. As part of the acquisition, CIBa inherited $2.2 billion of goodwill. Also, shareholders' equity was greatly reduced in 1998, going down to 3.3 billion from 4.6 billion Swiss francs. Performance is measured by three key value drivers here shown in the table as sales growth, EBITDA, and velocity. Sales growth was down 11% in 1998. This was due to sales of the former Allied division being down by 45%. The poor sales figure also affected EBITDA, which was only up by 0.4%. And velocity, which is sales, the ratio of sales to net assets, was down by 0.12 for 1998. So the poor sales combined with 2.2 billion Swiss francs of goodwill is what made this sales velocity number go down. So overall, the performance was bad from CIBa acquiring Allied. Who won and who lost? The winners were the Allied shareholders. They made a huge profit on their shares. Another winner was Hercules. They exited the bidding war and didn't overpay. The losers were CIBa. They paid too much for Allied. They took on major debt and had to take on major cuts and restructuring. David Farrar, the Allied CEO, who was kept on with CIBa as an executive, wound up resigning a year after the acquisition. So he also was a loser in this takeover. As a postscript, in May of 2000, CIBa sold their polymers division to service the debt from the Allied takeover. In October 01, CIBa would receive a negative credit outlook because of their high debt because of the acquisition. And in 2008, BASF would ultimately buy CIBa. CIBa just could not service their debt and could not afford the high raw material costs at the time. So in conclusion, CIBa paid too high a price for Allied colloids, and this hampered their performance for years to come till their ultimate takeover by BASF. This concludes the presentation. Thank you.